Hello, it's me, Charles, again. I'm here with yet another video for you. And this time we're looking at something on financial modeling, building the three financial statements, the income statement, the balance sheet, and the cash flow, all from a trial balance. So we have a trial balance here that we'll be using to create the income statement and the statement of financial position. And then we'll be creating our cash flow. I will also help you understand charts of accounts. So, because they are related, I will help you to understand charts of account and why they are what they are. We'll take a look at the balance sheet equation also here and learn some few things there that would help us to build income statements, balance sheet, and the cash flow. Also, we will be coming up with this. So here you can see what we would finish with. We would be having our income statement. We'll build our income statement. We'll build our statement of financial position like this, and we will build it so that everything balances. And we are going to build the cash flow. So we'll build the cash flow also, and you'll be learning how to use the cash flow to balance your balance sheet. You'll also be learning the relationship between the income statement and the statement of financial position and the cash flow. So it's quite interesting. So if you don't mind, let us jump in and start creating all of this. We've got the chart of accounts, that's COA. That's for chart of accounts. So it's the chart of accounts that is here. And then we've got our TB that we need to work with. It's also a table that is here. Okay. So what I'm going to do is I want to start by showing you how these relate to the balance sheet equation. So much of you would know about the balance sheet equation that says assets are equal to liability and equity. In other words, it is saying that the assets a business have are funded by liability and equity. So at any point in time, the value of liability and equity should be able to give us assets. However, we find that this has an extended, definition where it says assets are equal to the liabilities, the equity, and retained earnings. Now, this particular one is for going concerns, business that have started, they've started to make some profit and loss, and then the retained earning, which is actually your profit and loss, now determines, you know, now determines plowed back profit, and that plowed back profit is what makes retained earnings. So if we break down this a little further, we see that the assets are actually equal to liability equity. Now, the retained earnings here is made up of revenue less expense. So this is where because sometimes you call this the balance sheet equation. Of course, it is the balance sheet equation. But right here, you would see that there is a connection between the balance sheet equation and the income statement. The income statement has got revenue, it has got expense, and the difference between the two of them comes in as retained earnings. Now, how do we know that it balances? We know that it balances when we look at this as a mathematical equation. So it as a mathematical equation, we'll say, okay, what will make this equation equal zero? The only thing that will make it equal zero is if we take all of these things and bring them to the other side of the equation, to this side of the equation, and also allow the signs to be changed by moving from one side of the equation to the other side of the equation. And so that is what has happened here. A is A, so it's positive. Uh, Liability is positive here, but when it moves to the other side of the equation, it becomes negative. So is equity, it becomes negative, and revenue that is positive also has negative sign, and then expense that is negative here becomes positive. So when that is done, you see it's equal to zero. So you will see that demonstrated in the trial balance. You get it? That's exactly what trial balance is. Now this structure you are seeing here, it determines much of what happens in our chart of account. So right here in our chart of accounts, let me just use this up here. Take everything to the center. So right here in our charts of account, you would see that I've got this section of it that is assets. So what this section is all about is looking at the assets and it is classifying them into different forms. So you can see here that we've got assets right here, and these assets, we have the non-current assets and we have current assets here. And we have other names, the actual names used for them. And we have these one here. So you're going to see things like the liabilities also. These are let me use this for them. So we have the liabilities. In the liabilities, we have non-current liabilities and we have current liabilities that's also spread here. So the chart of accounts help to just, classify all of the entries that we can find in a trial balance. And we can also be able to differentiate them, classify them. This is revenue, everything about revenues. You get it. So everything here is their expense. What kind of expense is this? So these are cost of sales, you know. So that's cost of sales there. Then we have these other expense that are operating expense. So you see them have that 66666, but they are differentiated by some other numbers as you can see. So let me just use this for them. And then you have these ones. This is yet another one. Let's just classify them here. This interest, sometimes it could include bank charges and all of those things. And then we have this other one. This other one is taxation. So sometimes that is separated, you know, not just sometimes, almost often you find it separated. So you see, these are the different sessions that you will see in a chart of account. The chart of account just helps to map, items that you might find in the trial balance. And that is what you see here. Else, you have the trial balance here. So this is an example of a trial balance, that you might see. So your trial balance can come in different form. The trial balance we have here actually comes in a cumulative form. It's cumulative. So everything here is cumulative. And the reason why it is cumulative is because it helps you to do a check of your trial balance if it is correct. So I'm just going to insert a line here, and I'm just going to come up here and just equal to the sum of, everything that you find here. Okay. So enter, you can see it gives me 0. And if I should, continue to run through, you see it gives approximately 0 for each of them, indicating that yes, my trial balance for each period is correct. Now, this only happens when you have a cumulative trial balance. You get it? And that is why we are, remember this we did. This was the check. And so you can see that check taking place here. For each of the periods, the sum of all the, entries in the trial balance must return 0 for us, because what we are trying to do, we are saying, okay, if we get the value of assets and we subtract all of these things from the value of assets, we should be able to get 0. So that is what you're seeing happening there. And that happens only if you have a cumulative trial balance. Now, to further explain that cumulative trial balance, I want to use this. Everything 4 refers to revenue. So let me just have this in here and demonstrate what I'm trying to state. I would also, let me just create another column to do that for us. Okay. So here. So this is always the opening balance. So I have an opening balance here. And what I'm going to do at the start of the period, I'm just going to do this. Let me put it. So I'm going to use ABS here. ABS simply means absolute. Give me the absolute value. I don't want it negative. I don't want to classify it negative or positive. Just give me the value itself. So I'm going to say the absolute value of that subtracted from the absolute value of what was in the previous period. Now, this helps me to get what happened in the current period. current period minus previous period gives me what has the change that has happened in the current period. So if I should, copy this one down to my right hand side, I'm able to get for this particular, line in my trial balance, I'm able to get what happened in each of the periods, you see. So this is not what happened. 161 is not what happened in the period, but 85,000 happened in the period. And the previous period is being added to it to give you 161. So that's what I mean by it being cumulative. Okay. All right. So that's for that. And let me take these ones off. And then let's go straight to what we have to do. So we've seen the balance sheet equation. We've seen how it is used to, it reflects in the chart of accounts. And we have also seen how it works here in the trial balance. So all of this helps us to link it to the trial balance, okay, and to the charts of account. Now, when you want to create your financial statements, it's important when you want to create it in Excel, because we've got ERPs that help us to create it. But most of the time, we want to create it, we want to like customize it to something we want. Get it? So you will always need your chart of accounts, and you always need your TB. Your chart of accounts have got classifications that helps you to custom your classifications of items that you might find in your TB, and the codes help us relate it to each of them. So that is what we have here. Now you're going to see them demonstrated as we go along. Now that we have covered that aspect, we want to now go to use a tool called Power Query. So in Excel, you've got a tool called Power Query, and Power Query can help you to do all the structuring of your data so that you can use it to create your financial statements. So that is exactly what we're going to do. We're going to bring these two tables, into our into our Power Query, and then we'll work with that. We'll just work with that. So I'm just going to save this one somewhere and give me more options here, and let me save it on my desktop, and I'm just going to call it our TB data. So it's going to just be TB data there, and I'm just going to hit my enter button. So that's there. So I'm going to open a new Excel sheet, because what you might want to do, you don't want your Excel sheet to have so many, different things, sheets inside it. So I'm going to open a new Excel sheet like this. And what I'm going to do is that I'm going to go to the data tab. So this is the data tab, and I'm going to pick that data that we already have there. So what I'm going to do is that I'm going to just come right here, and it's a good thing. Let me just fix that, because you want it to, because you don't want any change to be happening that would obstruct what will happen in Power Query. You might just want to be definite. You might just know that, okay, here I have this name. I'm not going to insert any other, rows inside this. It's going to remain fixed like this. And for the TB, anytime I have new data, all I need to do is come and, start from here, paste it. Let's not call this sub, let's just call it account code. So we just paste it here, everything. And if there are new ones, they are going to come like this. They're going to come inside like this. So that way, Power Query can always take it and work with it just as we expect it to work with it. Okay. So before we move down to Power Query, it's a good practice for us to change this to an Excel formatted table. So this is the icon that helps us to do that, to change it to an Excel formatted table. So I'm going to just, how do I do that? You can click anywhere inside here, and then you can just come here and pick whatever you want, how you want it. You can just pick it from all of this place, and it would apply accordingly, So what I'm going to do is that I'm going to pick something like this, yes, and it has a header, so I leave it ticked and just okay. So this is what it will look like now. Oh, sorry. Why did it do that? Undo. Um, All right, I see why it did that. So it did that because it thought this is where the header starts. So I'm going to leave a blank row here before I do it. So here, and we choose this one. It has headers, and so that is what you have. So it remains this. Why are we doing this? Because you see, the format as Excel table defines your table area. If I'm to put another column here, it's going to add it to this definition, this table definition here. And Power Query works very well with such table definition. So I'm going to click on this one. I'm going to do the same thing for this one. Yes, it's fine. And we're just going to come in here and let me just choose another color for this. So it becomes something like this. You can always change it to something you want, something like this. And all right, let's make it consistent. Let's have this step. Um, we may not need this one. It's not going to obstruct anything, but let's just make it uniform. So we now have this one in here that we can use. Now, actually, when you create an Excel table, automatically, if you go to the name manager, you are going to see the two names of the tables. So this is the TB. The first one is the TB, so it's the TB, and then the other one is the chart of the account. So you can easily take them, edit it, and change the name of this particular one to be TB, and then you can change the name of this one, edit to be COA, chart of account. Okay, so yeah, so they would use those names, and that would be for it. So anytime you come here to add another period, it will automatically include into the table, and that name will be able to pick it. Power Query likes it to just be like that. Okay, so I'm going to save this, and I'm going to close it. So we're going to be here and work with whatever we have here. So what do? I'm going to just come to my data, and then from here, and I'm going to say I want to pick from an Excel file. So I'm going to click on this one. You could have it in a CSV file anyway, and you can use that one to pick on it. So here it's looking at the default. So I have my TB data here, and that's where I want to get things out. So I just import, and it's coming in. And then you can see that I have different sheets inside that Excel workbook I had. So I'm going to just take only what I need. I need this one. See it there. I need that one. I need to work with it. I also would need to work with this one. So I need to select multiple uh, sheets. So this one and this one, I'm going to select the two of them. And I'm going to now come here. I'm not going to load. I'm going to do some transformation. So it's important for you to check to see if there are transformations that you need to do before you load it anywhere. Even before you do a load, always check transformation. So I'm going to do a transformation of data, and you see what it brings out here is Power Query. So you can see Power Query up here. You can see the two tables that I have here. You get it. Two of them are here, and there are some transformations that are necessary to be done. And I will show you those transformations because you might meet with a situation where you have to carry out those transformations. You can see that I have a role here, and this role is a null role. Everything here is null. You can see it here. So that is one thing I want to take care of. I don't, like it here. So what I'm going to do is that I'm just going to check this first one, and then I can see a null here, and I'm just going to take it out. And okay, so that takes care of it. So the null is out now from that row. The next thing I want to do, you see, I have this, you can see all of these ones showing column, these 6, 5. Those are not the actual column headers to my data. These are the column headers to my data. So what I'm going to do is that I just need to look up here. So up in this, I'm still in my home tab. This is my home tab. You'll see this place that says use first row as header. It's got a drop down button, so you can drop down the button and check the options and pick the option that you really want. So I want to use the first row as a header. So I'm going to click that, and then you can see that they are all on top here. Okay, so all what I've been doing have been recorded here. When I sourced for the data, when there were some navigations to check what the data has, promoted a header. So these are some of the things that was previously done. You get it. And I decided to do some more things to it. Now, if I wanted to go back to what it used to be, I can always come and delete these steps that I have done. Delete all of these steps, delete this, and I can go further to just take it out to exactly where I want it to be. So this was what it was when it came in, after it sourced for it, and then it got to this point that we have, right here. So I can start working on it here. So actually there were two rows that we needed to take away. You get it? Two rows that we needed to take away, you know. So we don't want all these null rows. So we just come to one of them here and take out the null, and there we are. You can see it's what we want here. The column names, we need to change it. So we just come here and say, use this. So it's now what we want. It's perfectly what we want. If at all there might be other things you need to transform, you will need to come to your view tab here. So your view tab, it's having some things that can help you determine if there are other errors you need to take care of. And you can come to this place under data preview. You can come to this place that says column quantity. So you would see valid. So I have 100% valid. I have no issues here. If there were errors, you would see some percentage for errors and so on like that. So everything looks nice here for this one, and this is just fine. The next thing I will do is go to my TB, table and see what things I will do. Now, I don't want to accept these because it seems to have done things I didn't want. So I'm just going to delete this and delete this one so that I see this is the raw state. This is how it came. Okay. So the first thing I'll do, I still have my column quantity on. You can see that we have empty 4%, empty 74% here. Now, those are things that we really do not want. We want it to be valid 100%. So the first thing I'm going to do is take out the null here. I don't want to take out the null here for a certain reason because I also have nulls here. Because when you take out null, it takes out the entire row. So I'm going to check for a row. I'm going to check for a column rather that I really want to take out all the nulls there. So the account code shouldn't have a null. So I'm going to just come here and take that out also. And okay. And then this is what I have. Now I've taken out that particular row. I'm going to also look around to see what other things I will take out. I don't need this TB header here also. So I'm going to come here also, look for that word TB. You see, it has got account code and then TB. I'm going to just remove that TB stuff. And this is what we have here. Okay. So right now you can see 100% is here, but we still have a problem here. You see, we still have a problem here. So what do we do here? We're going to come here and then tell it that everything that is null here, make it 0. So you see why I left this. I didn't use this row. They also have values up here. This is the opening balance. So we're going to make everything that is null 0. And how do we do that? Now, let me tell you something. In Power Query, if you don't know where to go or how to go about things, chances are that what you are looking for is in the right click. So click on the column you want to work on, right click on it and check through this place. Just check through. Chances are that what you want to do, you will definitely find it here. But what do I want to do? I want to replace, I want to do a replacement, So what I'm going to do, I'm going to click on this one here. And no, that's not what I want to do. Where is it? Where is it? Replace. All right. The first thing I want to do after this is actually promote my, headers because my headers are not up there yet. So it needs to be up there yet. So what I'm going to do is, I think I'm through with all this quality thing. I know what I will do. So I'm just going to promote these ones up. So home tab, I'm going to come here and then promote my headers. Use first row as headers. And then this is what I have. Okay. So that haven't been done. Let's go straight and replace value. Okay, so replace value is now out for me. You get it? Replace value. And then I'm just going to say anywhere you have a null, use a zero there, and I'm going to just hit my enter button. So you can see that if I come to my column quantity under values, you'll see that I now have 100% here, and everything like it's okay. So if you go through, you're going to find that it's just okay. So the next thing that we're going to do is this. Hmm, yeah, we're done with this. We don't need it anymore. And so I'm going to do what you call unpivoting, because what you have here is actually a pivoted table, with the dates up here and all the other things here. It's a pivoted table. Now, in Power Query, and when we do data analysis, we hardly want to use pivoted table. We want it to be like raw data, like you can have it in the ERP. That is what really helps analysis. So I'm going to select all the columns that I need to unpivot, and in this case, all the columns that have got dates, because dates is not, an ideal header, So I'm going to select all of that, and I'm going to tell Power Query that I want to unpivot this. Now, how do I do that? Go to transform. So you can always look through and just check, hey, what would I want to do? I don't see it here. If you are a beginner, don't be scared of it. Just read through it. If it's not there, go to the next column and check. So what we really want to do is unpivoting. And so you can see it here on pivot columns. Take some time to look at the drop down button and check for the option that best fits what you want to do. So I want to unpivot columns that I've selected. So I'm going to just click on this one, and then you see that it has unpivoted them. So I now have all those dates now appear in rows like this, and then we have these values. Take note, all the transformation I'm doing is taking place here. So if you add new data to your raw data, it's going to still carry out all these transformations on your data. All right, so that's very important to know. So I want to change this to amount, and I want to change this header to period like this. Okay, so I want to change that, and everything like looks good now. This is going to be longer, and that's why you need Power Query, because when you add raw data, when you add new periods, you're going to have lots and lots of rows. So where Excel cannot take care of the number of rows that you use in Power Query, will definitely take care of it. Okay, so now we have this. Everything looks fine except one thing. Now, if you look up here, you're going to see that you have 1, 2, 3, indicating that this column is seen as a number column. You get it? And that is fine. I think we can leave it as the number column. You get it? Otherwise, it's just serving as an ID, and so we can change it to a text column. But anyway, we'll leave it. If we find reasons to change it, we'll come back to change it. Here we have periods. But did you notice something? The period is having A, B, C. That is because Power Query currently now is looking at this data not as a date, but as text. How do we know? So if you look up here, you'll see data type, you'll see text. You see. Now I'm going to change this. I don't want it to be text, I want it to be date. So now I put it at day. You can see it justifies to the right hand side. And that quickly tells me that I am fine and everything is okay. Maybe I should check the view and quality, and it's saying 100% fine. So I don't have anything that looks like a date that is actually a text or a wrong date. If I had any of that, it's going to flag it out here. Okay. So I think we look fine and good. And at this point, I have this as TB. I have this. All right. So at this point, I think I'm fine. I'm going to now load the data. Now the question is, loading the data, if you go to your home tab, you're going to see this that helps you load the data. Now, if you come here and click on the arrow down button, you're going to see these two options here. Now, what I want to do is that if I close and load, it's going to return these two tables inside my Excel sheet, and that is what I do not want to happen. You get it? That's why I do not want to happen. So what I'm going to do is that I'm going to use the close and load tool. It's very important you know this. So I'm going to do this close and load tool. And there's a reason why I want to do this, because my data can grow beyond Excel. So I want it to store it in a place where my data can be 2, 3, 4 million rows and everything can still work fine. but that's dependent on your RAM, in your machine. So higher RAMs helps you to actually do more in Excel. So when it brings out this for us, you'll see that the default is a table here. But we don't want to do it in a table. That's not actually what we wanted to do. We want to use the data model. We want it to sit inside the data model. So I'm going to just click this one to say, look, hey, add it to the data model. Now, because I don't want it in a table, I'll just tell it to build a connection to it. So I don't want it to load it in any sheet in this sheet that I have. This sheet is going to be for um, preparing financial statements and all of that. So that's what I want to see in it. So I'll just select these two like this, and I'm going to just click OK. So what it has done, you can see that no additional sheet is created. Rather, it has created connections to each of those tables that I have here, and I'm going to work with that. So let's start to see how to work with what is in there. I'm just going to, oh now, okay, let's leave this one here. Can I reduce it? Yes, I can. So let's just leave it here in the background. You can always refer to it. And so what I'm going to do is this. I'm going to start to, because once you have your data in the data model through Power Query, you can always start a pivot table and tell the pivot table where you want to, do whatever analysis you want to do. So I am interested in doing it from my data model. Do not choose from external because external will use our connections. And external is not very good for this kind of work that we're trying to do, you know. So I'm going to use my data model. I'm going to click on this. And where do I want it to start? This is a new sheet. Let's just start from somewhere here, okay? And I'm just going to say, okay, so now I have my, you see, my pivot table here. And I do have those two tables that are here. So if you expand it, you're going to see all the columns that are inside each of those sheets that we worked with. Now, I know if you're working along with me, because I'm going to leave the raw data for you to also work with to see how to build it. And if you're building along with this video, you might find out that yours does not look like this. So the reason is because, like in mine, from the settings GR here, I actually changed it to this here. Otherwise, this is what most persons see. You see, this is what likely this is the default that you would find in most systems. But you can always come to this jar and change it to something you want. I like it this way. I see all of this here, and I can just move them to wherever I want. Okay, so let's test something now. Let's look for the account name. Let's take this account name now and let's bring it to the row here. So you can see that I have assets, I have equity, expense, income, and liability, all of this here coming in. Now let me bring this amount here. So here is the amount here. So you can see the amount here, but what did you notice? Everything is the same. And the question is, why is it that everything is the same? So actually, I have two tables, and these two tables, I have not built a relationship between them. So when you have multiple tables, you need to build a relationship between them so that they can understand themselves. So you can see now, it just altered it out. That relationship between two tables may be needed. So what you can do is you can come here and then click create, and then you can start creating something right here. But what if you don't see this? I'm scared if maybe older versions would flag this. Another thing that you can do is you can just come straight to data. And then in this data tools, you're going to see data model. And right here, you can just click relationship. So you click relationship here, and this would show the list of all relationship you have in this workbook. But I want to create a new one. So I click a new one. So you can see that the dialog box we got when we got here is the same dialog box that has come out here. What does it want us to do? It says pick the tables and columns you will want to use for the relationship. So reading through things like this help you to actually, know what to do. So don't be scared. Just read the dialog boxes that come out. So if we come here, I'm going to pick the TB first. There's a reason why I'm doing that, because that's like the many side of our two tables. whereas this is the chart of account is actually a dimension table. It helps us to dimension, like this one here. It helps to dimension the numbers and all of that. So I'm going to just click these two of them, and it's going to ask me which column do I want to use to join them. It's the account code column. So the account code column joins them together, and I'm just going to click OK. So you can see that there is a change in what has happened right here. So I'm just going to come here and let's just do it like this so that we can see them. And so you can see that we've come to our zero value again. So all of them together give. So you can see that some have minus. Now you can relate with what we had previously done in, let me see if I can open this. I think I can. So yes. So you can see that what we did here is coming to play. You get it? That's the zeros you are seeing there. So that is what I was trying to tell you that time. You're seeing the zero that is here. Okay. You are also seeing the values that are here. Now let's look at it. Asset is a positive number. And here we said that it remains a positive number. And then equity is a negative number here. You can see that E has a negative here. It had a plus here before, but going to the other side of the equation, it becomes a negative. Now, if you look here, you find out that expense is positive. That's it. It has a plus sign that goes with it. Then you can see that income revenue is negative, and then you can see the negative that is there. Liability is negative, and then you can see it's negative. Only that condition will return a zero, like we have it here. You see. So from this, you can actually take your TB, your trial balance, and start to see things, with it, with it. So let me take this out, and then let me bring in this description one here. Now you can see bringing in description one, I've got everything. Yes, I see I have my zero, and I've got them here. So this description one is more like the detail. It's a detailed one on our, on our financials. So with this, if you are okay with this summary, you can just copy this and use it that way. No problem. But that's not where we're going. We want to go to something much more appropriate. Now, let's do something else. Now, for each of these columns, we would like to see the dates. So I'm just going to pull this period and bring them here. Okay. Now, there's something that's happened here. Whenever you pull a column that is, or a field that has a date, the Excel pivot table, that's newer version, automatically create dimensions of that date. Dimensions like year dimension, you get it. So year dimension, I'm not going to, I don't want the year dimension. So I'm going to take that out. So you see it expands it to this. I don't want the quarter dimension, so I'm going to take that out. And I'm going to take out this period month. I just want it to be as raw as we had it, previously. So here is it. This is what we have. You can see all the periods, approximately zeros, and everything comes out just like this. So you can now reason towards what I had done previously when I said I wanted to unpivot the table in Power Query. So I can always pivot it later using a pivot table to get it in this way. Okay. So this is just one thing that you can do. You could choose to say, okay, I don't want to see it in this way. So you don't want to see it in this way. So you want to see maybe something like this. You get it. So this is another dimension that you can use, to see all of them. And you can create different dimensions, to see whatever you want. This is more like an abridged one, something that you can see that staff cost is now just one row. It has brought everything together and then sum them to give it to you like this and so on. So it helps you to, see it in different perspectives. Now, for this, our assignment, we're just going to use our description one or whatever name you want to give it. It's going to work. Okay. So this is the one that we're going to use for all our analysis. Now, remember that I told you that the data that we have here is cumulative. But when you want to present your income statement, you will be doing it using periodic data that comes from the period and not cumulative like we have it in here. See? So that's the next thing we actually want to do. Your balance sheet is cumulative, always stays cumulative. The balance sheet always stays cumulative. But the income statement, we need to derive just the period value that is attached to it. So that is what we are going to do here. And I'm going to just create some new rows here. I'm going to create some new rows here. And what I want to do, I will just click inside of the, pivot table. And up here, I'm going to see columns that I can use to work. You see, if I click outside, I'm not going to see those, I'm not going to see those tabs that I need to work in my ribbon. Clicking inside, it brings it out. So if you don't see it, you know that you need to be inside your, pivot table in order for you to see it here. Okay. So this is what I'm going to do. I'm going to just, I'm going to click on this. Yes, that's where I will get it. And then I will come here. You see, so this filters group has got these slicers. I'm going to click on this slicer and I am going to select, the account name as what I want to use to slice this data. And I want to do something about this because what I really want to do is that I want to see only items that are supposed to be in the income statement. You get it? So I bring in a slicer so that I can use a slicer to filter this pivot table. So what am I going to do? I want income statement things. So I'll click on the income and revenue. See, it brings only the income, revenue aspect for me. And that's not what I want. I want also the expense. So you need to come up here because anytime you select, it selects one at a time. So we need to tell this filter that I want to select multiple cells. So you can see this icon here. You need to click on the icon so that it becomes yellow in color. That allows me to select, just another. So I want to select these two because they are the ones that contains the items that I need in my income statement. So I've succeeded and I'm going to call this one I'm going to rename it and I'm going to call it my IS for income statement raw. So in other words, indirectly, I'm trying to say that this is my raw data for the income statement. Now, there is one other thing I'm going to do. Remember, I said that these are cumulative values. I want what happened within the period. So how do I do that? I'm going to just come to this pivot table. I'm going to right click on it and I'm going to check through. There's this thing here called show value as. So of the show value as, I'm going to see different options. We're interested in the option that says different from, not percentage different from, but just different from. I'm going to click my different from. And what I am seeing here, you see, take your time to see the base field. We actually have two fields here. We have the period, we have the account description fields. These are the fields that we have used here in the pivot table. So the field that I really need to use is not this account description. So I need to just go here, click on this and bring out the period field. Now the period field, it says base item. What item do I want to find difference from? So I could find the difference from January, February, and whatsoever, but I could find the difference from a previous. So that is exactly what I want to do. I want to say the current value minus the previous value give me the answer. So I'm going to just hit my OK button, and that is exactly what it has given to us here. If you remember when we did revenue, you will see that we had this 77,500 here, and at the beginning, we had this 76 when we were talking about cumulative values in the trial balance. So that is what is happening. I've succeeded in getting the period values here. Remember, I've not used any Excel functions to calculate this. So your pivot table helps you to just do exactly this. I don't need this grand total here. So what I'm just going to do is I'm going to take out grand total off. So it has also gone off below here. So what I can do is say my grand total should only be for the columns, on for columns only. Then it's going to be here. So it looks nice now, and we can use. So this is for the raw income statement. You get it? I'm going to create another one for the balance sheet. And to do that, I'm just going to right click on this, do a move, make a copy, take it to the end, and then this one. So I'm going to rename this one. Um, it's going to be BS for balance sheet, raw. So that's BS raw and enter. So that's it. So I need to change this one to be looking at just the balance sheet item. So I'm going to just tell this one to get away, and I want to select multiple, and I'm going to take my asset. Sorry, clear it. So we're interested in let me take out those that shouldn't be here. So I don't want expense. I don't want this other one. So these three things are the ones I want in here. And then I have something for my balance sheet. But remember, we had done, periodic values. In other words, this technically will be what your cash flow should be giving you. Difference between period one and period two. You get it. But I'm not going to use this to work. Rather, I want to use the cumulative to work. So what I'm just going to do is I'm going to go back, summarize, show value as, I had the difference from, but I'm going to say no calculation here. So it's going to go back to what it was previously. So I'm going to leave this because this is how I'm going to use it to produce my financial statements. All right. So now we're here. We are making progress. We need to create another sheet. This time around, this is our financial statement. Okay. So that's our financial statement. So whichever way we want, we can actually create our financial statement here. So we can start from the income statement. Okay, I'm just going to make everything here bold, and we're going to have our values. So we are going to have our dates come out here. So let me just structure it a little bit. I'm going to put my descriptions here. My header descriptions will be here, and then my sub descriptions will be here, and we'll start our dates somewhere here. Now remember that our date started from the 31st of December of 2022. 2022. So that is where our date starts. Actually, this can be made blue so that anybody would know that you can actually alter what is in here. Okay. And then we can now automate this by using our EO month. Use our EO month function. It wants a start date. I'm going to pick this, and it wants the number of months. I'm going to use one because I want it to go 1 month ahead. So that's what I have. I'm just going to format it to be a date and take away that color there. No field. So this is what I have here. So this is the one I'm just going to drag, and I'm just going to drag it down, and it can go as long as it wants to go, but for now we know it ended here. If you do not want the date to be this, to be this long, you can always customize it, to go to dates and choose one that works for you. So I can choose this. So behind the scenes, it still has our full date, but we just want it to appear just like this. All right. So there it is. All right, let me just use one color for it, and this one, and make it bold. All right, let's just appear like this. This is the only one we can maybe like change. If we change anything here, it's going to affect all of those ones. So the first thing that we want to do is bring in our revenue. We're going to bring in our revenue. Let's make these ones bold. Maybe I just use a color like this. Sorry, like this, make it bold. Yeah, so we have our revenues. We can bring in our revenues here. Now, how do I bring in revenue? I'm going to go to this IS here, and I'm going to look for what did I use to get our revenue. So it has product 1, 2, and 3, and I'm interested in just these ones. Okay, I'm interested in just these ones. I'm going to bring them here, just paste them here. So once you have got to this stage of the analysis, you've brought in these ones here. The next thing that you want to do is to use a function in Excel called getpivotedata. Now, the getpivotedata is actually a function. If you start like this, you're going to see it that you've had this getpivotedata. Now, in order to bring in the inputs into this getpivotedata, it can be, it can be quite a little difficult for many new users. So what I always tell persons to do is just come here and just say equal to, and then come in right here and just select any cell, just any cell you want to select, any cell, and then hit your enter button. So what actually happens is that Excel like creates the function and the formula, and it is right there, looking at the value that you have selected here. Now, the thing about this is that should you want to copy this, it's going to be repeating the same thing. So we really need to make this thing dynamic. That is actually what we need to do. So that is exactly what we're going to do. And to make it dynamic, I'm going to just tell you something you can do. So if you just hold, come to this boundary of the formula bar and you drag it down like this, you're going to see what the formula looks like. Now, don't get scared. This is something easy to handle. I'm going to help you to understand what is going on right here. But the first thing I want you to do is to, so you're going to see the get pivot function. You're going to see the first comma and the second comma. So that second comma, I'm just going to click right in between it here. And I'm going to hold my alternate key and I'm going to press enter. Hold down my alternate key, press enter. So what it does, it allows me to have several lines in my code. You get it? So this is going to be one of them. Everything here is period, period, and I'm just going to go here after the comma and hold down my alt key and press enter. So what this whole thing is trying to tell you, it is trying to tell you that, well, it is doing something in a pivot table. It is summing data, and actually that's true. All what it is doing here is using a sum function to get about all these things that are here. Then the next thing that it is telling you is that this this is, this one is the name of the sheet where you have the pivot table, and then this B11, that is the reference to the first cell. You see B11, that's the reference to the first cell that starts the entire, pivot table. So it uses that to, identify where the pivot table is, and then it takes its values from there. So this shouldn't be anything complex to you. Now let's come to this one. This one is saying that I'm actually picking two values. I'm picking two values from a pivot table, one from the TB and one from the chart of account. And that's actually true, because if you look through here, you would see that I actually picked period and chart of account. So that's all of that. For the amount, that is what the sum function is doing. It is summing them, everything about amount. So everything is represented here. So now the question is, what can I do to make this formula dynamic? So the first thing I will do after doing all of these lines, I'm going to just hit my enter button so that it accepts these as lines. I'll be coming back to them regularly, to see if I'm doing the right thing. Now you'll notice that there is this period, there is this part of it that has a date in it. You get it? There's a date that is in it. So it's actually taking April 2023, April 2023 of depreciation. So if you come here and you see depreciation is right here, and April, the month of April, you'll see that that's the value that you get right here. So that's what it's picking for us. So I need to make this dynamic, I need to make this dynamic, and I need to make this depreciation part dynamic so that it can work. So let's do the first one. So the first one we're going to do is just this one that we have here. Okay. So this one that we have here, I need to, I need to be able to change it and bring it to something that is in there. So I'm going to just, I copied it, I pasted it here, I hit my enter button because I want to create exactly what I have right here. In fact, what I really need to do is to, let's start with this. So I'm going to create a formula that would return this for me. And when I return that formula, I will use it to replace that portion of this formula. And then it should be able to give us exactly what we want. Okay. So this is how it goes. I'm going to first thing I see that there is a date inside it. So I'm going to come in because everything here it takes it in as a text. You can see the quotation marks that makes it a text and all of that. It takes it as text. So if you send in a date into it, it's not going to recognize it because it's not a text. So I'm going to come here and use a text function equal to text. And I'm going to change this one to a text. Okay. So what I'm going to do is the text function receives the value. And after taking in the value, it takes in the format. So what format would I use? Now, in this case, you want to use a universal format for your date so that it can accept any date format that there is. Now, the universal format is to have your years coming first, then your month, and then your and then your and then your day, day, DD, so something like this. Okay, so I'm going to test it if it gives me what I want. So when I click on it, you can see that it's giving me what I want: my year, my month, and my day. You see, it's giving it to me here. The only thing it's not giving to me is this, because this function get pivot data actually wants to get a timestamp. It wants a timestamp here. So what I'm going to do is that I'm going to just pick these other aspects of the formula. You see, these other aspects, sorry, that's going to start from the T to the end. I'm going to pick that part of the formula and I'm going to concat it with this other one. So what I'm going to do is that I'm going to say I need to concat this with this thing that is here because it's going to be the same. We don't have time, minutes, hours, and all of that. So it's going to be the same for all of them. Okay. So I will just test this one out and you can see that I've already gotten, what I want right here. So the only thing that I've not gotten now is these two that are here. I need to find a way to, get them in and bring them in here. So the only way I can do that is actually to, have these, and I'm going to bring in bracket like this and this other one. So for that to be able to hold on to my formula, the text, I need an ampersand to do that. So if I click on it, you would see that I have gotten what I want right here. You see, I've gotten what I want right here. Now, this is what I'm going to do. I'm going to pick this whole thing. I'm going to copy it and I'm going to come in here and I'm going to change everything here and up to this point, and I'm going to just paste like this. Now, when I hit my enter button, you can see I have an error. Now, the reason why you have that error happening there is simply that I have this quotation mark here, and it ought to be, you can now see that when I take out the quotation mark, you can see that it starts to reference what I have here. But I'm just going to add an ampersand there. So by the time I hit my enter button, you can see that it's giving me a value 0. So I'm going to just copy it down here. I'm going to just copy. Now you can see that I'm getting different values coming out here. But the only thing that's happening here is that it is looking at the dates. It is not looking at these ones here. So that is what I'm going to do next. So I'm coming in here and clicking on this. So you see here, it says depreciation. It has depreciation inside here. Now, what I'm going to do is I'm going to make this dynamic so that we can be looking at anything that is here. So how will I do that? So what I'm going to do is that right inside here, I'm going to have a quotation mark and an ampersand here. And then I'm going to just reference this guy. You get it? And this guy that I'm referencing, I'm going to be copying my formulas this way, and I want it to remain in this column. So I'm going to just lock the reference, the column reference, with a dollar sign, at the back of it. And then reference is like that. And then here, I need to, hold this, string to this formula. And to hold the string, I need another ampersand. You get it? And another comma like this. You see it? So you can see now that I'm now referencing this cell right away. So if I hit my enter button, you would see what would happen now. So you can see now that I'm getting the revenue values that we have here. So sales product one, if we come in here to look at sales product one, you can see the 76 here. And just right there, you can see the last one, 77,500. That's there, meaning that I have successfully gotten a formula that can look at my pivot table and then bring everything together. So you don't need to be scared of this. If you take your time to just look at it, you can actually fix it. You can watch it over again to see how to get your references, whether they are dates or whether they are named strings or what. You can easily get them. So I'm through with this, and I'm just going to copy this one down. Before I do that, let me check. Okay, this reference, the date reference, I need to log the row because I'll be copying it down. I want it to stick to this date row. So I need a dollar sign just behind that one too. So now we can go here and copy, and we can come down here and then copy it down. Now remember what we said. We actually said that if you look at the equation, revenue in our trial balance is having a negative, a negative sign. But in our financial statement, we will want it to have a positive sign. So I'm going to come back to this first formula. I'm going to just put a negative sign there. And this is what I would use to update everything. I'm going to use it to update everything here. Copy it down. So all of them becomes, positive. I no longer need this. I'll just close this one down. Everything is positive now. So I'm just doing a control arrow to copy to the right and control D to copy it down this way. So what that means is that I now have my revenue. I now have my revenue, yeah, total revenue. And I'm going to just do a sum of all of this. All right. And here. And I'm going to find a way to just, indicate that this is revenue. So we'll find a color that is appropriate and use it for it. Something cool to the eyes. Let's use this one. Okay. All right. Let's use that for that one. Let's just make this small. So that's our total revenue. Now, all other things are going to be very easy to do. For example, if I want to get my cost of sales, here's my cost of sales. I am just going to copy this, bring it somewhere here, maybe somewhere here, paste it. And I'm just going to come here, copy the same formula. That's the formula that we're going to use all through. So I'm going to just put it here. And you can see that I have already gotten my, cost of sales. You can see the negative there. I'm just going to just do this for it. So that's it. And I can easily copy this and bring it here. That becomes my total cost of sales. All right. So that becomes my total cost of sales. The next thing I'm going to do, sorry, this is my cost of sales. Okay, so that's my cost of sales. Let's do something that's totally matches with this. All right, good. So the next thing that we're going to do, just want to have a line here to indicate like this. Okay. All right. So the next thing that I'm going to do, I'm going to bring in my OPEX line. So OPEX is coming in here and everything that makes OPEX. Now, for this one, you might have a particular way you want to, arrange them. For example, I might be interested in arranging, or might be interested in getting everything that is wages and salaries. Take this and bring it here. Everything that is wages and salaries here. And again, I'm just going to take this formula. So it becomes a formula that you can use all around. So this is it. So everything it brings is, let's test it and see. These salaries and wages admin 7998. So let's check to see 7998. So it brings exactly that for us. And then we have it. Then we can start to bring in some other things that might be important. I'm going to leave out depreciation. Let's just come here and take all of this. So you might want to, you know, pick things the way you think, or the way you want to arrange them. So I'm going to bring this one here, and then so we've taken everything. We also have these ones, cleaning, computer expenses. Yeah, we have these ones. Yeah, accounting fee, computer expenses. Okay, all right. So we're going to take this one. Sorry, we're going to come here and just paste it here. Then we're going to check if there is any other thing we're missing out. I think I've done all of this. So security, subscription. We're going to carry these ones and bring them in. We're going to also take we're leaving taxation first, training, uniform, and all of those. Okay, so um this. Okay, so we just go right here and paste this. I can check if I have double entered anything, highlight duplicates. So I don't have duplicates at all. So no duplicates. So I'm going to just, copy this down, select this, go as far as I want to copy it, as far as I want to copy, and Control D, get everything for me. So let's assume that I've gotten everything that is OPEX, and I'm going to have my total OPEX. I'm going to have my total OPEX here. I'm just going to copy everything here in order to maintain. Let's just do this here, but this changes to OPEX. Sorry, OPEX. All right. So I know that I need to, edit this formula to capture everything, and that is what it is. All down. We're going to Control arrow, copy it to this other side. So that's my OPEX. So before we calculate other things, you might want to have your gross profit here, gross profit. So gross profit here is going to be the sum of it's going to be the sum of whatever is our revenues and then our cost of sales. So that's where we have that all around here. And we're just going to make it bold and then leave it out there. And you might want to have your gross profit margins. Yes. So here it is. It's going to be this divided by the revenues. And let's have that in percentage. So just like that. And yeah. So right here, you see that you have one that is returning a zero because it's saying, hey, you cannot divide by zero. So what we're going to do, we're going to use our if error. If error, what you should just do is give me a zero. Okay, so that's fine. So I'm going to just update all of them, and it gives us exactly that. That becomes our gross profit margin. So usually, what we do is maybe just make it maybe something gray. Let's give it a gray like that, and maybe reduce it a little bit. And so it just stays there, but something visible that anybody could just look at and then see what is there. Okay, I think we're fine there. So that happens. So now I've gotten my total OPEX. I'm interested in my EBITDA. I'm interested in my EBITDA. And and here again, what I just do is I'm going to do a summation. I'm going to sum whatever I had in my gross profit and whatever I get in my OPEX. Okay. So that gives us this. I'm going to control arrow, letter arrow. And so control letter arrow gives me this. I'm just going to take this format and use it right here so that we have all of it. So our income statement is coming out. So there are some things we have not taken out. For example, depreciation. Remember that we omitted it somewhere around here. Yes, here. So I'm just going to pick that value. And so I don't have anything that is amortization. So this represents it. So I'm going to just paste that here. I'm going to pick this. So that having been pasted, we now have everything for this. And for us to get other things that might be, you might want to have something like your EBIT. So EBIT, you have taken away depreciation and whatsoever. So it's going to be the sum of everything here and whatever is here. So if you have two rules for depreciation, amortization, you want to add up all of them and then you have this. So the sum function helps you to do quite a lot. Let me just format it before I make a copy of it. So up here, so control arrow, letter arrow, control letter arrow does the job to take it all the way down here. So after this, we know that we have interest, we know we have taxes that we need to take out here. So sorry. So right here, we had interest here. So actually, I'm going to bring the interest somewhere down here and I can easily delete this one here. Okay. All right. So everything works fine. And you can see that the formula we had gotten, we just use that one or two, and dynamically it's able to just look at whatever is here, look at the date, and then it uses that one to come out with whatever we have. So interest and taxes, we can take them out now. So for taxation, we're going to just move this one here. And then we're just going to extend this formula down, to give us that. And that will be our profit after tax or our net income or whatever you want to use. You can just use that to do that. Okay, so I'm going to just come here, take this format and use the format right here. So what I'm going to do is same thing, just the sum of whatever my EBIT was and take this two and there it is. So that is formed here, so we already have this one coming out. All right. So I need to check to be sure some things are done right. So here, okay. So where did this take from? My EBITDA is looking at the wrong thing. So my EBITDA should be looking here. Yeah, because I saw those negatives and I felt, hey, why should that be? So if you noticed it while watching the video, please just pardon my oversight. So I think this is correct. So this is 2576. And if I come here, I see 2576, 39272. Let's check that 39272. So we're correct. We've been able to get our statement to look like whatever way we want it within our organization. You get it. So even if you add additionals and refresh it, all what you just need to do is to come here and then extend, you just extend and you'll be able to see what comes out of it. You get it? All right. Now, at this point, we want to do the balance sheet. So I'm just going to copy this one and here again. So we're going to call this one the statement of financial position. All right. Statement of financial position. Okay. All right. So normally what we just do is, in this case, we just equate whatever is here to whatever is here so that we only update one place and it should update in all other places. So here I'm just going to control letter arrow to copy it down. So each of these becomes a reference to what is on top. So we only update here if at all there is any changes that we need to make. Okay. So what I'm going to do now is to start building my balance sheet. So I'm not going to take from here again. We are through with this. We're going to go right in here and then take whatever we want from here. Okay. So let's start doing that. You could have the structure you want for your, balance sheet. For example, non-current assets, non-current assets that will be followed by some current asset, and that could be followed by, we'll get total assets somehow, total assets, and we'll now have our liability where we have our current liabilities, and then we have our non-current liabilities. So again, you'll find out that the balance sheet takes the structure of that balance sheet equation that we use then. So we have these two here. So that serves for, so we'll have somewhere where we have our total liabilities, and then we have equity somewhere, equity. We'll have retained earnings, retained earning. This, according to this trial balance that I'm using, it actually has a line for retained earnings for prior year, rather prior year, prior year, years, sorry, years, and so we're going to have another retained earnings, and I'll show you how to calculate that one, how to get that one. Retained earnings, this time it's the current year, current. So you have retained earnings for current year. So that should give us whatever will be our total, and then we should be able to calculate fairly. Let me leave out these totals first and just calculate. So let's go straight and get what should be in here. So we'll go to our balance sheet and look for everything that would constitute our, our current, non-current assets, So I have plants, I have property. I'm going to pick this, come here. Where is it? Where is it? Here. And I'm going to just paste them here. And I have another line to bring in. I need to bring this. This is accum depreciation. It helps you to get your net, because what we are actually looking at in our balance sheet is the value of our asset less the depreciation that there is in it. So that's what this does. So I'm going back to this same formula that we have used before, and I'm just going to bring it right here. I'm going to bring it right here. But what I just need to change is that I need to change some things inside for you to look at the right thing that I want you to look. For example, I know that I'm doing the sum of the measures of whatsoever that is here, but actually I'm looking not the income statement, but the BS. I'm looking at the balance sheet. So even if I do this and it gives me a value, I'm not going to stick to it, because I need to come in here and check to see where does this, what's it called? Pivot table start. So it starts from 11. So that means We're picking the right thing. And so this is actually what I need to bring in here. You get it? This is what I need to bring in here. Let's confirm that plant and equipment 237,500. I'm going to just come to my raw here and check for it. Plants and equipment 23500. Okay, that is correct. All right. So another thing I want to do is that that we had remember that we had used a sign here, negative sign here. We're going to take it away for this one. So we're taking it away from this and telling it, give it to us in positive. So that's what it is. And I'm just going to bring it down here. I'm going to copy it down like this. And so you can see that the formula has done the right thing. The depreciation is now negative, and then we can get what our total non-current asset should be. Okay, so it's going to be the sum of all of this. It's going to be the sum of all of this. And what I'm just going to do, I'm going to take this format and then apply it here. Okay, so there it is. We just copy it down. So your financial statements are now being automated and coming out this way. So let's see what makes up our current assets. Let's go and check and see what will make up our current assets. We'll come in here. Our current assets, we're going to have cash. We're going to have inventory. Those ones should come in. And we're going to have receivables. So I'm going to take these ones first. And my current, so I'm going to paste this one there. Go back to that sheet and check for other things that should be current. So my receivables should be current. So I hope that is all that we're going to bring in. If there's any other thing, we can always bring it in. So I'm going to just come, I'm copying this one. I'm going to copy that one and bring it here, paste it for all of this. And now I don't need to do much thinking. Yeah, so this is my total current assets, and just 3 lines. So that means I can just copy this and drop it here, make this bold, make that one bold. So that's my for that one. And then I can now compute my total assets here. So total assets, total assets. Let's come here to check it. So total assets becomes the sum of all of these ones up here, this and this. So we're going to just use the same format here, and then we just take it down here and control letter arrow, copy it down to all of those places. So the next thing we're going to bring is our current liabilities. So how do we get that one in? So let's go to check our liabilities, but this time our current liabilities. So we're going to have payables. We're going to have payables come in. I will put payables here first. Maybe we're going to have some more. And we're going to have provisions for taxation. Yeah, that should be a liability. We're going to have, let's check, liabilities, long term. This is a long term liability. Payables is there, planned, retained. Yeah, we have trade payables. That's a liability too. So here. All right, so that done, I'm going to just take the same formula. As you can see that we're using the same formula to build up everything. You don't need to be scared about this guy now. As long as you fix it, it's going to be a good boy. So we're going to have these ones here. And because they are liabilities, our formula needs to, change. The only thing that changes is that we're going to put the minus sign right there and let it flow. I'm a proponent of having, everything in my statement, in my balance sheet or statement of financial position. Have them positive because it's going to help us calculate for the cash flows. Okay, so here it is. Let's have some lines here. And so this becomes our total current liabilities. And I'm just going to import this one. Since I still also have three lines here, I know that it will be doing the right thing. Okay. So here it is. This comes in here. All right. And I'm just going to make this one bold here. So that's for that one. Non-current liabilities. Let me bring everything down. I think we have just one line from what I see. Long, 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 long. We have this one. Okay. So take note, you can see that I'm using these things just as they are in the uh, pivot table. Otherwise, it's not going to give you what you want. So if I come here and just take this one out, you can see it's not going to give us what I want. But it helps you to be consistent and take things the way they should be. So for everything liability, I'm just going to have this one. And although it's one, we're just going to have total liabilities just in case you're going to have more than one item there. And so this one comes in here and here. So I don't want it to do this. Not leaving room for any error. So just going to have this so that we know all totals has got this, and then we can be able to map them out. Now, the next thing we're going to do is, so I have my total liability. I think right now, let's do something on equity. Okay, so we take that out, and so we've got equity. These are just one line, I think. Let's check it. So we've got shareholder contribution. And so what I'm going to do is I will just have them in one place rather than have them in different places. So let's take these ones out. Let's cut this, bring it here, and bring the other aspects. We have retained earnings. This is actually for the, so we have this one here. I'm also going to have retained earning current. Yeah. So this one, I'm not going to be calculating it from the TB or the travelers. I will not pull it in from there. Um, so so I can have my total equity. Make it bold. I'm just going to copy this one and put it here. Check if it's doing the right thing. Yes, it is. And we're going to just bring the same formula, looking like an almighty formula now. So you can see that it's not giving me the right thing here. That's fine because I'm not going to get that from there. I don't want to. So I'm just going to seal this up and then run like this. Now, what I want to do is to do a kind of check. I'm going to do a kind of check. I'm just going to pull this one and put it somewhere here. And I really don't need this. You can have it. You could choose not to have it. Well, it's just going to be my check. And usually I try to get what is my total assets. I'm also going to get what's my total uh, liability, liability, and what's my equity. So something like this. So what I just do is I'm going to just look for my total assets. I bring it in, and then actually this could be total equity, liability, and plus equity. Let's make it less equity. You get it? Let's make it less so that we can easily compare them quickly. So here I'm going to have a sum of my everything that makes up my total liability. Oh, I didn't do that, so I need to have something for that. So I'm just going to do this, and this will be my total liabilities. I could have added them, but I always like to have a line that would take care of that. Current plus long term, which is non-current, would give us this. So we're going to just get this out here. And then the next thing we're going to do is we're just going to sum two things together. We're going to sum our total liabilities and sum it with our equity, and then we can see if what we want is what is happening. Certainly, it's not going to be because I'm missing a line, and we're going to fix that there. So, what do you do to try to, check if there is no balance? So there are many things you can, do. For example, you could say this subtracted from this, and then you can try to find what this particular one is. You get it? So you could try to find what this particular one is, So this becomes the basis by which you decide if your balance sheet is doing the right thing or it's not doing the right thing. Okay. So here is it. Yeah. So um, this is our check. That's going to be our check there. Again, some might decide that you want to, do a kind of, format here that if it is less than, less than, if it is less than zero, you want it to flag out, something, like this. You get it? So sometimes in reality, you might just say, oh, I want it to be maybe less than one, anything less than one. You get it? Maybe anything less than zero point 0.5, because of some give and take whatsoever. That's good, whatever works for you, but you should make sure that this difference is very, very immaterial, insignificant. So we have this one here. So what I'm going to do now, I'm going to bring in my retained earnings, and this is what I'm going to do. So my retained earnings is actually a cumulative sum. So I'm going to say sum. I'm going to go up here, up here to to whatever, it's here. And I am going to just do this. It's going to be, the sum of this. And I'm going to hold down my shift button and press my colon key. So it does exactly this. So I'm going to close my bracket. But the thing I want to do, because here it is saying sum this to this. You get it? Sum this to this. So what I want to do is a cumulative sum. I want it to be summing everything while starting from this column. Keep summing as I copy through, but starting at this column. So this is what I do. So I need to lock one of these columns. This column E, I need to come to one of them. You can see that they are identical here. I'm going to lock one of them. So with a dollar sign, I lock that one and hit my enter button. And what I'm going to do is, this is not for this, for which period? December. Okay. I'm just going to, anyway, let's go. I'm going to just copy this all through. So now I see that I have a negative, and this is why your check helps you to do that. So I really would need to check what is happening. So I have a liability here. I have this one here. So in such a situation, you might need to have to check to find out if you have omitted something. And wait, that means order receivable. I think, where's my trade receivable? Trade payables. Okay, I think there's a trade. Let me see. Let's go and check here and see if there is trade receivables. Yeah, I have a trade. That's 170. I think that's where we have. That's where I was having the issue. Okay, So I'm going to just take this one and see if that's what solves it. I'm going to put it right here. I'm just going to bring this one down and see if it solves it. Wow, okay, it solves it. So I have my zeros, but these zeros appears to be greater than 0.5, inside. So one way you can test it is just come in here and then just extend all of these ones and see if you uh get anything. But nothing is coming out of it. Why? All right, let's look at what our condition was. So I'm just going to go to manage rules and I'm going to ask it, is it less than 0.5? Okay, let's see. Let's edit it and see what really gives us. Is it less than 1? If it's less than 1, is it less than 1? If it's less than 1, oh, I see. Sorry. So if it is greater, that's what we need to use. If it is greater than 0.5, 0.5. So we can't use this. We should use greater. If it's greater than 0.5, we know we have a problem. So that is it. So it's not greater than 0.5. So if it is, then we have a problem. So this way, you are through with your balance sheet, you are through with your income statement, and that's how it comes about. So we can navigate to our statement of financial position, and we can also navigate to our income statements just like this. Okay. So at this point, we want to create our cash flow, statement of cash flow. So I'm just going to take this, copy it, and bring it down here. So I want to reuse it and just call this my statement of cash flow. The statement of cash flow. All right. So this being done, we can start working on our statement of cash flow here. And so the first thing I want to do in my statement of cash flow is that I want to have some adjustments. So in reality, you're going to have a series of adjustments that you need to bring in. One of them is you're bringing in your net profit. You're bringing in your net profit. And that is based on the fact that your net profit is not cash. So you're trying to see what adjustments you can make in order to get your cash. So these are opening periods, so we really do not need anything there. So you will find out that in the cash flow, that opening, there is really nothing you need there, you know. So we'll just go to the period, the active period where we started, which is in January 23. And we're just going to link this straight down to our profit after tax or net profit as the case may be. And then we just have that one in there. So control letter arrow helps me copy it all down. Now I would start to make some adjustment. The only adjustment I'm making here is to add back my depreciation. So sometimes you have depreciation and amortization, all of those will be added back. The reason because they are not actually cash. So your depreciation is not actually a cash outflow, but it's just an adjustment on on what you have as your asset. I mean, it depreciates, and then you want to use it to adjust your assets, especially in your balance sheet. So for here, we just add it back. You get it. So everything we did for depreciation here was not actually a physical cash outflow. And that's why we are doing that here. So we're just going to come here equal to. I'm going to put a negative sign because I want to negate this, negative number here. So it becomes positive, and takes care of our that takes care of everything of our adding back depreciation. So we can now have an adjusted net net profit. All right, so this net profit is going to, I'm just going to take one of this. With financial models and Excel, that's one advantage. You can reuse, but you need to be very careful when you are doing this reuse, because the formula here states that it's adding everything here. It looks good, but I would just want to make it absolute, and I would connect this to it. So that becomes my adjusted net profit. So I'm going to have this one to be this. Now, the next thing I'm going to do is I'm going to have another section which will look at changes in working capital. Now, the changes in working capital include anything that has to do with your current assets and your current liability. So what I'm going to do is that I'm going to just have my current assets, changes in my current assets. And one of the ways we do that, you just have something like this here. So it's like if there is an addition or a subtraction of cash, this is going to take care of it. So we're going to have this, and we'll have it for current assets. Okay. So we're going to have this one for current assets. And how we're going to calculate it. So this is what we're going to do. We're going to find out what has been the change between the current position and the previous position. So to carry out this, I would want to put on something. So I'm going to my view tab here, and I want to put up this focus cell. Now I'm going to hit on it, and it's just going to give me this so that you can see exactly all what I'm doing and how I move about doing things. So you can see I'm in my current position, which is January. So I'm going to just come here, and then I'm going to put a sum. So what I want to do, I don't want to do them line by line, so I'm going to just go to my balance sheet. So I'm going to look for my current assets. So these are my current assets here. See, these are my current assets here. Now I'm going to do something. While I'm summing them, I'm going to exclude cash, because your cash flow is actually trying to work out what this cash number is. See, so I'm going to just exclude cash and sum up all other things that makes up the cash flow. If you want to do something detailed, you will take each of them and then work with each of them. So right now, I don't want to work with each of them. I just want to do all of them, put together. So I now have the sum of my current assets, excluding cash, for the current period. Now I'm going to do something here. I'm going to subtract what was in the previous period. I'm going to subtract all of these ones from it. So once I subtract it, I can hit my enter button, and then this actually means that this is the change that has happened in this period. Now, there's one other thing that we have to do. Now a lot of people have problems, in working out the cash flow, because they're always thinking, oh, the current asset minus current liabilities, or current liabilities minus current asset. Some go and say that some always have issue with, is it current position subtract previous position, or previous position subtract current position. Now, my advice is that take any one of them. For me, what I do is that I always take current position minus previous position. Current starts with C, so that's the first one, current, minus previous, P, in the alphabets that come later. So you can do that, but with one principle in mind. Whenever you do anything that has to do with assets, you need to actually come and have a minus for that formula. So I'm going to just enclose my formula in brackets, and then I put a minus sign. So that is for assets. Why are we doing that? Because the normal flow of assets is for cash to leave the business. So even if it's receivables, you've given out items out, and that's equivalent of cash given out. You get it? So that is just what this one is. So I'm going to hit my enter button, and then I'm going to copy it all down here. Okay. So that's for that particular one. And then we're going to do the same thing here. The same thing here is going to be for current liabilities. Liabilities. Okay, so this is going to be for current liabilities, and I'm going to do the same thing. Okay, I'm going to do the same thing. It's going to be a sum of everything that is current. So I'm not going to do non-current liabilities. When you are working out changes in a working capital, you are looking only at the current assets and current liability. So in this case, I'm going to sum all of them, and I'm going to close it. I'm going to subtract it from the previous. So a sum of everything that was the opening. You get it? A sum of everything that was the opening, and I close it. Now, the principle here is that when it is a liability, you do not need to include a minus sign to it. So I will accept it just as it is here, because a liability in its natural because a liability should be an inflow of cash or a cash equivalent, an inflow of cash or cash equivalent. So I'm going to just update this one up to this point, and here we would have this one. So what I now have is that I can now have my total changes in working capital. Okay, so this is my total changes in working capital. And what I'm going to do is just do a sum of this both. So we're going to sum this both like this. So I'm going to just use this. So we're going to use this, and what we just do is copy all of this one down here. So we now have our total changes in working capital. Now, once you have achieved this, you are now ready to get your cash flow from operations. So the cash flow from operations is made up of your adjustments, no matter how they are, how many, and then your changes in working capital. So that becomes a cash flow from operations. Another way you can understand cash flow from operations is that your net profit is from operations in the period. You now adjusted that net profit for non-cash items that were not cash outflows or items that were not cash inflows. Whatever they are, you want to make adjustments on that because it doesn't translate to actual cash. Okay. And then you now come to your working capital, because your working capital, when you give out, when you have things, something like receivables, is like technically you are lending out money to someone to bring in a future date, and then or you are lending out cash to bring in a future date. And when you have current liabilities, you're getting cash to give out in a future date. So we need to account for those cash that we find inside there. So that gives us our total cash flow from operations. So what I'm going to do here is I'm going to just sum the two of them, this one and this other one, summed together, and that gives us what we have right here. Okay. So I'm also going to use this one too, because it's a total column that I will be interested in, and I will be coming back to it. In some cases, this one, I think that's more appropriate. Let's just take out the fill color and use a liner up there, because it is not really major. This is what is major to us. We need this one. Okay. And same thing I want to do for this other one right here. Okay. Okay. So that's what I would like to do. I want a situation where we can have our major lines, because we're going to use them later. So that's our cash flow from operations. Okay. Now, the next thing that I want to do is that I want to see what are changes in investments. Investment. Now, when we talk about investments, we're now talking about the fixed aspect of assets, the fixed aspect of assets, or the non-current aspect of assets. So that is going to be, we're going to find out whether changes in our PPEs, like PPEs here. So this is going to be PPEs, PPE. Okay. So if there is anything in this range that causes a change, we definitely want to track it. So this is what I do. I'm just going to, let's go up and see if we'll do a sum or not. So we have our PPs. These are our PPs here. So what I actually need to do is sum these ones. Notice that I'm not including depreciation inside it. I'm not including it at all. So what we are trying to actually do here, we want to find out, if did we spend additional money when it comes to our cumulative sum of assets from the start of the business or from the opening capital. So this minus the sum of these ones. So this is money we have spent. We are not taking into consideration accumulated depreciation. Just what was it that we spent, over time. So this is what we do. And remember, this is an asset. So that means I need to do an equal to, enclose everything in, parentheses or brackets. And that's what we have here. So I'm going to, so you can see that there actually was no changes in this. Now, what do we mean by that? So if you look here, you will see that everything was the same and there wasn't any change in it. All right. So now I'm going to just come here and, so you can see what has happened here. What happened here is that we did some acquisition of PPEs. You get it? That's exactly what happened here. So if you go up here, you would see that that acquisition was in plant and equipment, and we also had some acquisition in our property. So you can see the values went up. It remained same until we got to all this period where we did some more acquisition. So if we wanted to do it, we could have done it line by line, but I'm just using one line. And you can always do the same thing. The same formula will work line by line to give us what we need. So I'm just going to act like we've got this one here because it's major to us. So what I'm just going to do is we're just going to um, just going to create a total line. So it's just going to be this. Sorry. Um, right here and here. Close it and just roll it all down. So we're going to have this one there. So the next thing that we're going to do, this is going to be our cash flow. No, I want to have it as major. It's going to be our cash flow from investment. So that's our cash flow from investment. Cash flow from investment. So that's an important total we'll be using as. And now we'll now come to check for what are the in changes in financing. Okay. So here in the changes in financing, what we'll be doing, we'll be looking at some two things, I think. We'll be looking at long-term loans, longer term loan. So because this is a way in which the business gets to finance things. Now you will notice that as we do the cash flow, every line in our balance sheet is involved. See, every line is involved. So after making the adjustments from the income statement, which connects the income statement to the cash flow, that's a connection to the cash flow. So we also have our current assets and current liabilities taken into consideration. We also saw that we took into consideration our PPEs, and now we are taking in the long-term or non-current, non-current aspect of liabilities, and we're going to still do same for equity, equity. Or actually we called it something capital, shareholders contribution. Okay, shareholders contributions. shareholder contributions. In reality, you're going to have many other things that might be under this particular place. For example, you could have shareholder loans and all of those things. They could come, in here. They could come also in the finance section, contribution. Okay, so we're going to look at those two. Let's go for the loan. So for that of the loan, we're going to come here. Take note that this technically is a liability. It's a liability, not technically. So I'm going to look for my long-term loans here. And where did I? Okay, let me just do the formula here. Where is it? So it's going to be this subtract from the previous, and we're just going to hit our enter button. So, but I'm going to copy this. I'm supposed to have started from here, and we're just going to paste it so that that registers there. Then we're going to do that for our equity, and I'm just going up here. I'm going to take this. We're going to take this one, subtracted from this other one. Now notice I am not doing a sum with retained earnings. There is a reason why that is actually happening, because sometimes some individuals preparing the cash flow include it, and they will be having some troubles in there. Now the reason why we are not doing that is because our retained earnings is what connects, it connects using these adjustments that we have already here. So there are two places your retained earnings is coming in. So one of it is here, so we don't have to duplicate it again. You get it? So it will be a double counting if we do. So it's coming in here, so you really do not need to bring it in again. Okay, so you really do not need to bring it in again. All right, so the second place you are going to see it would be when we are doing our beginning cash. So for previous period, why I'm not adding this retained earnings from the previous period is simply because that has flown into opening cash, and in our statement of cash flow we are going to have a row that will look at the beginning of the opening cash. You see, so those are two places where they come in. You don't need to add them. So I'm going to just leave this one here, and we're going to extend it all through here. Okay, so that takes care of that. You can see that there was an addition to shareholder contribution, and like you can see, it is a positive number indicating that cash came into the business. So that is for that. For the loans, everywhere you see that it's a negative number, it means that there was a payment. So cash loans were paid down. So if you actually go to our loan, you will see that our loan was dropping. You see, it was dropping all this while it got increased again because there was a drawdown, and then a pay down continued for our loans just like that. You get it. So that takes care of that. And so this becomes our cash flow, cash comes our cash flow from financing. So these are the three that we have. Let me just do it this way. Let me take this off here, put it here so that you can actually see. It's also a better arrangement of it, I think. Uh, Let me take this out from here and bring it just here so that you can see these three lines, very important lines. So here, we're going to just do a sum of all of this. We're going to do a sum of all of this. Actually, it shouldn't be here. It should be here. Okay. So I'm going to copy it to my right hand side. So I'm going to just select like this, control and letter arrow should be able to give me just that. So we're going to format it so that it would be one of those sorry. So we're going to format this because it's one of the important totals in your cash flow. So we now have, the three sources of finance, which is cash flow from operations, cash flow from investment, and cash flow from financing. We now have each of them. So the sum of the three of them actually gives us our cash flow for the period. So I'm going to just take this one and here, and it's going to be our total. It's going to be our total cash flow for the period. So for this current period, this becomes what our cash flow would be. It's a sum of cash flow from operations, cash flow from investment, and cash flow from financing. So when we talk about cash flow, it can be cash flow in and out. So that's what it becomes here. And we're just going to copy this one too. We format it because it becomes a major aspect of our cash flow. So that becomes this. All right. So the next thing that I'm going to do is that I'm going to bring in my beginning or opening, my opening cash. So my opening cash is that from any previous period, I could have um, I could have some cash that is coming into the current period, and I need to take account of that for us to know what the cash really is. So here you just need to do your equal to and go to your balance sheet, because in your balance sheet you're going to have the cash from the previous period. So we can always connect it to this cash from the previous period. So this is another way in which the cash flow has a relationship to the balance sheet. So it relates it in this opening cash, and then that opening cash define can define what your cash flow is all going. So it gives you what is the opening balance, and then you can now have your closing. You can now have your this closing cash balance. That's your closing cash balance that you will have here. So your closing cash balance is going to be a sum of everything that has to do with whatever was from the period plus whatever came in as a brought forward or opening. So that's where you have this particular one here. So I'm also going to format it with this color like this, and then we'll take this down. Okay, I'll take that one down there. All right. So one thing you might find out right now, I'm going to take out oh, we might still need that. Let me just see. So one thing you might want to compare if there is a difference between this closing balance, and minus the the closing balance that your balance sheet has. Remember that these numbers came from the trial balance. So you just subtract, and you will see that for this first period it is zero. And if you consider it going forward, it also shows that it is zero. You can build a check, for this particular one. But what we normally do, or what is ideal, what I would recommend for you is this. And it's a way for you to ensure that your balance sheet and your cash flow are in sync. So what I'm going to do is that this one, you can see it comes from the get pivot table. Everything for the period, apart from this opening, everything for the period for that year, I'm going to just delete it. I'm going to delete it, and you're going to see that the check shows that we have some imbalance that is actually here. So what then do we do? So it is always best practice for you to come here and equation and equate it to this your cash balance that is here. So I'm going to just click on this one and then hit my enter button. So in this way, your cash flow is balancing your balance sheet. Whenever those two agree, you know that everything is right. So this is just what I do. I'm going to just use the color to indicate let me use the color green. Let's use the green color. So I want to use a green color to just indicate that this is an external reference from the cash flow. So I'm going to just come here and have it just like this, and then you see that it balances here. So that is why you recall that I didn't include cash when I was looking at the changes in current asset. This is what I was coming to, that I don't need to include it. I just need to do all others. And by the time I use my answer from my cash flow to balance my balance sheet and everything agrees, then I know that I've done a good job. So right now, I'm going to take this out because it has helped us in our checks. So I'm going to take that out, and you can see that we now have the income statement, the statement of financial position, and the statement of cash flow. And once again, how do they relate to each other? Now, your retained earning or your net profit or profit after tax helps you to join the balance sheet, there at this point. So you can see that this formula is actually looking here and cumulatively summing all of this to get this. So that's a relationship. This is a relationship between the income statement and the balance sheet. Now, for the cash flow, we find that we had to make a relationship with the income statement here. So you can see that we are looking at the income statement here. In fact, all our adjustments are looking at the income statement, while all other things in our cash flow are looking at all other lines in our balance sheet. So that's a relationship. Your cash flow is actually looking at changes in each of the lines in your balance sheet, except that we did not use cash and we did not use anything that pertains to retained earnings. So that's it for this short course on, creating the three financial statement. I want to believe that you learned something and you have come to understand how these are prepared. And if you like the video, please do consider subscribing to the channel, and please help us to share it to other persons who might be interested in it. Videos like this will be coming up, so you might want to hit the bell icon to ensure that you get notified if videos of this come up. I also love comments from you with regards to the video. Please, whatever your comments, please feel free to put it in the comment section below. Thank you very much for watching, and I will see you in yet another video.